Bank governor today, saying that the Reserve Bank needs to have more control over public sector banks as opposed to the government or the finance ministry. Now, the Indian economy is all set to revert to its trend growth rate of 7.5% by FY20. That, according to the World Bank. It also adds that attaining a growth rate of over 8% will require more structural reforms. The report says that India needs to clock a growth rate of 8% plus for the next 30 years in order to become a middle-income country. So is India making the move in that direction? Ronojoy Banerjee caught up with Junaid, Kamal, Ahmad of the World Bank to get his views on India's growth prospects.
The report rightly points out for India to sort of catapult itself to the middle income status country, we need to grow 8% plus for a period of 30 years. Is there anything you've seen so far in the last year, 2 years that gives you the hope that perhaps 8% in the long run could be a possibility?
I think the basis for the 8% growth rate for the future is being established today. You see the type of infrastructure investments that are happening, not just only in terms of capital expenditure, but in terms of trying to create new institutions. So the whole EDFC, the freight corridors that are being created, these did not exist before. It's actually taking freight along very special types of institutions. So investment in infrastructure is extremely important. We're also seeing a reflection and a revisiting of how to reform the electricity utilities. Clearly, India's shift towards renewable energy can only be sustained if its electricity distribution system is also improved. So the Uday system and other reforms that are happening become extremely important in that structural shift. We're beginning to see the whole financial inclusion in terms of use of technology, in terms of bank accounts, being able to deliver services of social protection to people. All these create a foundation where, as India moves people out of poverty into an arena of vulnerability, you begin to create protections.
And this will, of course, have a gestation period.
It will have a gestation period, but your question was, am I seeing anything that's putting in the seeds for the future?
It's important to clarify, just in case viewers think that, after 2 years we're going to see 8% growth. What's also interesting, the report brings out how synchronized India is and how well entrenched the Indian economy is with the global economy. And perhaps this is one aspect which is largely underappreciated in this country. Considering that India's exports is stagnating and in fact declining, which I think is a worrying trend, what does it now mean in the context of the inward-looking policies we're seeing around the world, especially coming from the West? Does that sort of make India's exports more vulnerable?
I think there are two very important factors that we need to think through. One is GST. GST is creating an internally unified market. And if there's investment that follows the GST trend in terms of infrastructure, so movement of goods and people internal to the country improves, you're going to see a growth boost from internal trade that's extremely important. And because this infrastructure investment is related to how ports function, how rails function, the intermodal connection, you'll see that the connections between the world and India and its efficiency will increase. So there's quite a big boost that India will pick up from following up in terms of GST. In terms of the global story, I'm absolutely in agreement with you that it is important to keep global trading systems open. We really cannot sustain economic growth anywhere in the world unless global trading markets are open. And I think we from the World Bank will continue to take that message forward.
Well,